Shall we start?
Yes, sir.
Okay. Uh, Good evening. Good afternoon. Today we are supposed to discuss about indirect tax. Any query, any questions from our direct tax part? Anyone have? Please raise. Okay, so we are going to start with our indirect tax. That is 7B, paper number 7B. Uh, what is the features of indirect tax? In general, indirect tax that denotes the burden and levy are on two different person. That is the feature of indirect tax. Generally, when the burden and levy are on two different person, that is the that we consider as an indirect tax. Indirect tax is regressive in nature. Uh, Before GST, we know that GST is a part of our syllabus. Before GST, there was in India the taxation mechanism would like this. Say, say I bought goods worth rupees 1 lakh from Mr. X. He is located in say West Bengal, and I am located in Karnataka. Say he is supposed to levy tax on this amount, say 10%. So tax would be on this transaction is 10,000. So altogether, it will cost me rupees 1,10,000. And then say I added rupees 40,000 as my profit. And then at 1,50,000, I'm selling this product to Mr. Y. And on this transaction, I again will charge rupees 15,000 as a tax. This one is tax. And again, this is tax. So altogether, Mr. Y is supposed to pay rupees 1,65,000 to me. Can I say that? Can I say that the breakup of this 15,000 is like this? 10,000, 1,000, and 4,000. Can I say that this 10,000 and this 10,000 are the same figure? That means the levy of tax on this common identity, that is 1 lakh, my cost is 1 lakh. That is 10% of it. That means these are taxed twice. Can I say this is double taxation? Once government has taxed 10,000 while buying, when I am buying the goods from Mr. X, and again when Mr. Y is buying the goods from me, again these 10,000 are levied. Moreover, this 1,000 is a tax on tax, that is 10% of the tax paid by me to Mr. X. That means this is a tax on tax, and this is double tax. And this 4,000 is absolutely one time government is charging from me. That is 10% of the value added by me. Whatever the value I add on that addition, 10%, that comes to 4,000. That is a fresh tax government are supposed to charge. In any mechanism, if there is a double taxation or there is a tax on tax, which is known as a cascading effect of tax, if these two are there in any taxation system, which will lead to inflation, that the product would be costlier, and this is not a good mechanism to levy tax. So to avoid these two things, that is a double taxation and cascading effect of tax, government started of thinking about some other type of taxes. Hence, government introduced GST mechanism. Before GST, there was a VAT. VAT is also just like GST, but it is at state level and GST at India level, national level. So in this era, how GST function? Instead of this transaction, if in the GST era we execute this one, say 1 lakh is the my sale, I purchase goods worth rupees 1 lakh from Mr. X, then whatever with the tax I am supposed to pay, that will be considered as my prepaid payment of tax. That means in technical word, it is known as ITC, input tax credit. And then my value addition of rupees 40,000, and then 1,40,000 I will charge to Mr. Y plus 10% tax, which comes to 14,000. Altogether, I will charge 1,54,000 from Mr. Y, and out of this 1,54,000, 14,000 is the tax component. And when we are going to pay this 14,000 to the government, I will say, yes, there I have some prepaid taxes. So to knock off this one, and differential amount, that is 4,000 I am supposed to pay. This 4,000 is the exactly 10% of value addition made by me. The value addition made by me, 40,000, this is the exactly 10% of value addition made by me. So in this way, first of all, we eliminate double taxation. We eliminate tax on tax. If these two things are eliminated from the system, then think about the price. When when we fail to eliminate these two features, the price of the goods in hands of Mr. Y is rupees 1,65,000, and on the other hand, price of the goods is 1,54,000. That is the exactly difference of double taxation and tax on tax. So it will reduce the prices in the market. It will reduce the prices in the market, and it will also eliminate double taxation and tax on taxation. So this system was introduced in the taxation mechanism in India. Earlier, this what was there, but that was at state level. The credit is not available from any transaction which are interstate, or any taxes levied by central government are not available as a credit to this when we are going to pay tax to the state government, and vice versa. So to eliminate all this hurdle, government thinking about GST. Is it clear? Now, why GST are required? We understand two things are major problem in our existing taxation system, and then to introduce GST was a big hurdle before the government. What was the hurdle? Think about our constitution. We know that the government are supposed to levy taxes if they are authorized, if they are have power from constitution. The seventh schedule of the Constitution of India provides three lists. List 1, list 2, and list 3. We already know about this thing. List 1 provide the item on which union government is entitled to make law. And on list 2, the state government is entitled to make law. In this list, there is a item called levy tax on manufacturing, that is excise duty. Then here state government are authorized to levy sales tax. So different governments are authorized for levying different type of taxes. But in GST, we need a common platform where a common tax are required to be levied by both of the government, central as well as state, on the common activity. That means here central government are supposed to levy tax on manufacturing, the activity, the triggering point, the event on which this tax was be applicable, that is manufacturing. On the other hand, state government is authorized to levy sales tax or VAT on what is the taxable event, that is a sales. However, if government want to levy a single tax, if government want to, central as well as state government want to levy a common single tax, then what they are required to do, they should authorized by the constitution to levy a tax both. That means central as well as state government are authorized to levy tax on a common taxable event. But there is no such common taxable event. So that both of the government, union as well as respective state government, can levy tax on it. In the constitution, that part is not, that part is missing. There is a no common taxable event was there, so that both of the government are entitled to levy tax. In if central government is entitled to levy a tax on manufacturing, the state government is entitled to levy tax on sales. Central government is entitled to levy on services, but state government is not. Hence, hence, since there is a no common taxable event for both of the government, Constitution of India are required to be amended. After getting amendment from the Constitution of, after getting amended, Constitution of India provides the both of the government to levy tax on common taxable event, which is called supply. That means the GST, for the purpose of levying GST, what they did, they amended the Constitution of India, and now they are both of the government are authorized to levy tax on a common taxable event, which is termed as supply. Hence, GST come into picture after amendment of the Constitution of India. Now, again, there were some features of Indian GST. We are required to discuss all these things. Few features we are required to understand. GST, after introduction of the GST, since it is levied on a common taxable event, various existing taxation mechanism was subsumed in the GST Act, in the GST law. For example, earlier central government is supposed to levy central excise duty. Now they are not supposed to levy this, but GST are replaced. Similarly, state VAT, sales tax, central sales tax, purchase tax, etc., etc. All of these taxation are subsumed in the GST law. Instead of levying different type of taxation, now we are supposed to pay only single tax called GST. I believe it will reduce the burden of the businessman. It will reduce the burden of compliances on the businessman. So the mechanism would be become simple. And instead of making compliance with different laws, you are required to comply with any one law. I believe it is a cost saving also. You are required to incur lesser amount of money to in the compliance of this taxation. However, after GST, few of the taxation are still continue. That means you are required to pay these taxes even though GST are in the picture, like basic central tax, like basic custom duty, research and development sales, export duty, anti-dumping duty, safeguard duty. That means custom part are untouched. And here state excise duty on petroleum product, on alcohol, stamp duty, profession tax, and motor vehicle tax, road tax, etc. You are required to pay this tax. Still, even though there is GST, these taxes are still you are required to pay. Then, since due to GST, prices are going to be decreased, it will make our prices competitive. So we can export more, and our trade deficit would be taken care of from this movement. Then one nation, one tax. Earlier, what happened? This is the major goal to achieve with this GST law. One nation, one tax. What is it? Earlier, what happened? Say VAT. Earlier, VAT was levied at state level. Say this pen in West Bengal is subject to tax at the rate of say 5% VAT in earlier pre-GST era. That is the in West Bengal, and same in the state of Rajasthan, the same pen is supposed to be levied at a tax of say 12%, and same pen in the state of Tamil Nadu may be taxable at the rate of 18%. A single type of pen, say this is an example, A piece of pen, a pen, if I bought the cost without any tax, say it is rupees 100. If I bought this pen from in the state of West Bengal, I am supposed to pay 105. If I bought this pen from Rajasthan, I am required to pay 112. If I bought this pen from Tamil Nadu, I am required to pay 118. Don't you think it will create unnecessary competition among the states? This will create unnecessary competition among the state. Now, after GST, what will what happened to be changed? From wherever you are buying this pen, the rate of tax would remain same. After GST, if you buy this pen from West Bengal, the rate of GST would be 5%. If you buying this pen from Rajasthan, rate of tax would be 5%. If you are buying this from Tamil Nadu, the rate of tax remains same. If it is 18%, then across India it would be 18%. If in state of West Bengal it is 12%, across India it would be taxable at the rate of 12%. So we can say that earlier we can due to this fractured tax structure, the we can say that even though we are in the same country, but considering the different rate of taxation, we can say that we are living in the same country or we are living in some other country. Hence this GST will levied on the basis of one nation, one tax. Be careful here. One nation, one tax does not denote each and every product of goods or services are subject to same rate of tax. It is not like that. But a single product would be taxable at the same rate across India. That is the meaning of this statement. One nation, one tax. In India, one of the major change brought by GST is a destination based tax. Earlier, what happened? Earlier, what happened? Say VAT, say VAT or CST. In lieu of when we are selling something, then this type of tax would be applicable. In case of intra-state transaction, that means buyer and seller both are located loosely. We can say that buyer and seller are located in the same state. That would be considered as an intra-state transaction. On that intra-state transaction, VAT is applicable. On the other hand, interstate transaction, when buyer and seller are located in two different places, suppose buyer is located in West Bengal and seller is located in Maharashtra. In this situation, CST is applicable, VAT is not applicable. Now, question arises, the state, as per constitution, state government are eligible to levy tax on sales. Question arises, which state government are eligible to collect this money? Whether the buying state or whether the selling state. Earlier, it was the seller state who are eligible to collect tax on sales. Earlier, the state where the seller are located are eligible to collect tax on sales. That means this collection, that sales tax would remain with the seller state. But in GST, the situation has been totally reversed. In GST mechanism, the situation has been totally reversed. That means now, after GST, the revenue of tax belongs to that state where buyer is located. That's why it is termed as a destination-based tax. That's why it is termed as a consumption-based tax. That means where goods are supposed to be consumed, that state government are eligible to collect that revenue. After pre-GST, 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 the seller state are eligible to collect money. After GST, the buyer state, after GST, the buyer state is supposed to collect that tax money. The buyer state are entitled to get the revenue of this GST in this type of transaction. Is it clear? Is it clear? What was the biggest change? This is the biggest change made by the GST. Number one, It is a destination based tax. What is the meaning of destination based tax? The buyer state where goods are destinated, where goods are reaching, that states are entitled to get the cake of that revenue. Earlier, the seller states are supposed to collect the money. So this one is the one of the biggest change made by the GST. However, when we are going to change the entire law, the seller state like Maharashtra are not happy with this one, this type of changes. Seller states like Maharashtra are not happy with this type of changes, so they are not ready to accept this type of changes. They are not willing to accept this type of changes. They are saying it will result loss of revenue to them. Maharashtra state like this is an example. State like Maharashtra are saying that we will lose our revenue. We are not ready to accept this one. So government, central government play a major role to make Maharashtra government to yes, they frame, they said, dear Maharashtra government, after implementation of GST, if you have any losses in your revenue, then we are here to compensate you. We are here to compensate you. Sir, how could you calculate the losses? How could you calculate my losses? Central government said, take the financial year 2015-16 as a base year. Take financial year 2015-16 as a base year. And if your revenue in any of the subsequent year go below this level, then the difference would be considered as your losses, and we are supposed to here to make good your losses. Central government assured that thing, but still Maharashtra government are not. Maharashtra is an example. The states are not happy with this one. They are saying that they are pleased that, say, in financial year 2015-16, Maharashtra government is saying that my tax collection is 50,000 crore for the entire year. Say, if you are supposed to consider this one as a benchmark, and in suppose 2018-19, my revenue is only 45,000 crore, then you will compensate me for only 5,000 crore. You will compensate me. Central government will compensate Maharashtra government amounting to rupees 5,000 crore on the basis of this benchmark. Maharashtra government states are supposed to give the explanation like this. We are not agree with this. Why we are not agree? The reason is that in this year from 15-16 to 18-19, we are also here to increase our revenue. We will also increase our revenue. We will also increase our tax base. So my revenue will also on higher side. How could I expect revenue of 50,000 in the financial year 18-19, where we are here to increase our revenue? We will also take such a measure that our revenue would be on higher side. It's, considering the inflation, my revenue would be on higher side. So central government again assure Maharashtra seller state, don't worry. Consider this one, the your revenue in the financial year 2015-16 as a benchmark. Add 14% increment for each year. Add 14% increment in each year. That would be considered for the purpose of calculating your losses for that particular year. And then say, considering 14% increment in each year, our figure from this, say this figure is calculated considering 14% increment in each year, it reached to 60,000 crore. So in 18-19, the benchmark would not be considered as 50,000, it would be considered at that increased figure. Now compare with the reality, the shortfall is of 15,000 crore. Central government is saying that yes, I am ready to pay that one. After getting this type of assurance from the central government, state governments are agree to levy this tax on destination based, that is a consumption based. Got it? Now the central government is worried. Why? From where they will get this fund? If in any circumstances they are required to pay this type of compensation to any of the state government, then how will they manage this one? To pay this type of compensation, central government has introduced called GST compensation cess on couple of goods like same product, that is a demerit goods, and some luxurious product. GST compensation cess are levied to fund in scenario when central government are required to pay certain compensation of on account of loss of revenue to the state government. This fund will be provide the fund for this type of compensation, for paying this type of compensation. Got it? This is the major features of our GST mechanism, that is the destination based tax. After that, one nation, one tax, we already consider. Dual model of GST. In India, we are supposed to apply dual model of GST, that is on the basis of nature of transaction. If it is an interstate and it is an intra-state transaction. Loosely, you may termed as an interstate and intra-state. If seller and buyer are located in the same place, it will be considered as an intra-state transaction. And where it is both of them are located in two different states, it will be considered as interstate. In case of interstate transaction, IGST model of the GST is applicable. On the other hand, in case of intra-state transaction, CGST plus SGST both would be applicable. The equation between these two rates, suppose IGST rate equal to 18%. In that case, CGST rate is also just half of it, which is 9%, and SGST rate equal to 9%. So altogether, rate of taxation would remain same, but the way of collecting taxes, we will collect tax on the name nomenclature of the collection would be different. In case of interstate transaction, the rate of GST is 18%, but which type of tax is applicable? On this, IGST, called Integrated Goods and Service Tax, is applicable. On the other hand, if the transaction is intra-state, then CGST and SGST model would be applicable, which is just half of the IGST rate. So we can say that the equation is like this. IGST rate equal to rate of CGST plus rate of SGST on the same product. On one more equation, we are rate of CGST equal to rate of SGST. In case of interstate, integrated goods and service tax is applicable, and in case of intrastate, rate would be remain same, but we will collect in 50% for central government and 50% for state government. Rate of tax in GST, couple of rates are defined, which ranging between from 0% to 28%. These are the IGST rate. Few of the products are supposed to levy GST at the rate of 0.5%, 3%. These are for precious items. In general, 5%, 12%, 18% and 28% are applicable. However, GST is not applicable on two type of products. One is alcoholic liquor, that means alcohol, and another one is couple of few petroleum product. On alcohol, the existing system is still prevalent. What is the existing system? The existing system, like excise duty as well as sales tax, are supposed to be collected by respective state government. That means state government are required to levy excise duty, that is a tax on manufacturing, as well as tax on sales on sale of alcohol. That means alcohol on the on the sale of alcohol, GST is not applicable. The existing system, that is, state government is entitled to levy excise duty as well as sales tax. That mechanism is still there. Petroleum products, there are five type of petroleum product: petrol, diesel, crude oil, natural gas, and number last, aviation turbine fuel. On these five products, GST are deferred. That means once they will decide, once government will decide, now we are ready to levy tax on this petroleum product, then it will be applicable. Then till now, till now, these five petroleum products kept outside of the GST purview. However, whenever government want to levy GST on it, they will by issuing a notification, they will levy GST on this five product. Existing system are still there. What is the existing system? Excise duty are supposed to be levied by central, and sales tax are supposed to be levied by state. This mechanism are still there. However, whenever government uh, uh, find out, yes, we are ready to levy GST on this five petroleum product, they will issue a notification, and from very next day, whatever with the date notified by them, the GST is applicable on petroleum product, on this five petroleum product. However, in case of alcohol, it is not through notification they will start levying GST on alcohol product. For this, we need to amend constitution again. This is the biggest hurdle. So there are two set of product on which GST is not applicable. Number one is alcohol. On alcohol, what taxation is applicable? The existing system, that is excise as well as sales tax, are levied by the state government. And to levy GST on it, we need to amend our constitution again. Without amendment in the constitution, it is not possible to levy GST on it. However, on the other hand, five petroleum products are kept outside the purview of GST. We can say that on this, GST is deferred. Existing system are prevalent. That is, excise duty are supposed to be levied by the central government, and the state government are entitled to collect sales tax on petroleum product. However, whenever government want to levy GST on this five petroleum product, they will release a notification with effective date notified in the notification. GST is applicable on this petroleum product. One more product, that is called tobacco. On tobacco, GST is applicable, as well as central government is entitled to levy excise duty. Apart from that, more or less each and every product, goods or services are under the purview of the GST. Is it clear? The next feature, on what GST we are required to pay. There is no multiple taxable event like manufacturing, like sales, like provision of service. They derive one common taxable event, which is known as supply. Detailed discussion regarding supply we will make afterwards. Registration are required, and moreover, there is one common portal they created for even the dealer, even the seller is located in West Bengal or located in Tamil Nadu or in Kashmir or in Manipur. They are supposed to register themselves in the common portal called GST portal, called gst.gov.in. That will be considered as a common portal for the GST. If you want to registration, you want to be applied from that portal only. If you want to furnish your return, then you are required to furnish your return using that portal only. That is, earlier the VAT mechanism. In VAT mechanism, every state government have their own portal for filing or registration of VAT. However, After GST, a common portal are there called gst.gov.in for doing all this type of functionalities. Goods and service tax compensation we already discussed. Now we are coming to chapter supply. If in one word we can say that what is the taxable event when GST is applicable? What is the taxable event for GST? In one word, the word is supply. If we did any supply, then we are supposed to levy, we are supposed to pay GST. What we are supposed to supply? Supply of goods or services. So we can say that if these conditions are fulfilled, then GST is applicable on us. We made a supply of goods and services, goods or services, or both. And that supply should be made. That supply should be made for consideration. If there is a no consideration, if there is no consideration, then GST is not applicable, even though there is supply, but still there is no consideration, it is not taxable. Number four, the supply should be made for in the course of furtherance of business. If there is no business, if we are not selling, if we are not supplying in the course of business, then GST is not applicable. Number next, that supply should be made in taxable territory. What do you mean by taxable territory? Suppose a person located in UK are selling some goods to a person located in USA. Do you think our GST is applicable in this type of transaction? A person located in UK is selling goods to a person located in USA and goods are moving from UK to USA. Do you think Indian GST is applicable? No. The answer is no. Indian GST is applicable only in case where supply has been made, where supply has been made in the taxable territory, that is in India. Then only our GST is applicable in this type of transaction. Otherwise, if the transaction is happening outside India, how could I say that yes, it is GST, Indian GST is applicable on that transaction? So that the supply should be there, but that supply should be made in the taxable territory. Number six, the supply should be made by registered person. If you are not a registered person, you are not supposed to pay GST. So this will open a window for the person who are if they do not want to pay tax, if they do not want to pay GST, so they are not supposed to become a registered person. Now, the definition of registered person are saying that a person who is registered under GST law or the person who is liable to be registered under GST law are considered as a taxable person, are considered as a taxable person. So I can replace this word with taxable person. And last one, and the last one, the supply should be of a taxable supply. For example, I supplied alcohol. Am I liable for GST? The answer is no, because it is not a taxable supply. If these seven criteria are fulfilled simultaneously, then only the GST is triggered. This type of transaction will attract GST. What are the seven elements we are required to fulfill before attracting GST? Number one, there should be supply. Supply of what? Supply of goods or services or both. That supply should be for consideration. That supply should be in the course of furtherance of business. Supply should be made in the taxable territory, should be made by a taxable person, and it should be a taxable supply. Then only the trigger that the GST is applicable. Is it clear to all? If any of the element is missing, ideally GST is not applicable. If any of the element is missing, then GST is not applicable on that type of transaction. For example, if suppose I supplied alcohol liquor, I supplied petrol, I supplied diesel, etc., GST is not applicable. Even though petrol or alcohol are goods, and there is a consideration I'm engaged in the business of selling alcohol, still GST is not applicable. Why not? Because it is not a taxable supply. I provided certain goods. Say I supplied a notebook, few notebook in the school as a free of cost to the students. Since there is no consideration, GST is not applicable. Even though it is a supply, it is changing the hand from my hand, it is transferred to someone else. But since consideration is missing and GST is not applicable, that means all of these seven elements should be fulfilled. Then only GST is applicable, else it is not applicable. Done? Anyone have any question till now? Anyone have any question? Is it clear to all? Please respond through the chat box or
Yes, sir.
okay. However, there are few exceptions we need to understand those exceptions. Generally, when we are using the word supply, what do you mean by supply? There are at least two persons are involved. One is seller. We can use the word supplier. One is supplier. Whenever we are using the word supplier, we understand there should be two persons are involved, and another one is recipient. Agree or disagree? If 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 two persons are not involved, then we at least two persons are not involved. We cannot say that yes, there is a supply. To consider this, they made ideally there should be two persons involved. At least two persons should be involved in the transaction. Then only it will be considered as supply. But the one exception they've created, one exception they mentioned about this, the activities or transaction by a person. Now we are discussing about exceptions. The activities or transaction by a person other than an individual to its member or constituent or vice versa for cash, deferred payment, or other valuable consideration. For example, this is a club and A, B, C, D are member of this club. Ideally, in income tax law, and there are various decisions of Supreme Court where they mentioned that the income from mutuality is not subject to tax. Income from mutuality is not subject to tax. The logic behind that, the income of the club should not be considered as an income because if they are generating their income from their members only, we will not term it is an income. It is not taxable in hands of club. The reason is that in general, considering various decision of Supreme Court and the concept followed in income tax, we can say that the reason is that club and their members are considered as a single unit. They are not considered as a different person. Considering this philosophy, how could a person can earn from himself? It is not possible to earn an income from himself. Could you earn from could you earn a rupees 100 from yourself? No. To consider a receipt as an income, at least that money should be received from someone else. That means there should be two different person. If you are not getting money from someone else, we cannot say that you earned any money, you earned any income. Considering the same logic, if we apply in the GST, since club and their members are considered as a single unit, are considered as the same person, if club is charging rupees 100 from Mr. A against some services they provide, since club and A are considered as the same unit, it is not treated as a supply because to constitute a supply, there should be at least two persons, supplier and recipient. But as per various decision of the courts, it is held that both of them are considered as a one member, one person. Hence, GST, the concept of supply is not applicable. However, GST law wants to levy tax on this type of supply. They framed, if in case of club, if they are supplying any goods or services, that means other requirements are fulfilled to their members, it will constitute as a supply and liable for GST. And for to execute this thing, they know that there are the decision of Supreme Court, etc., which may go against them. They inserted a clarification. What is the clarification? Notwithstanding anything contained in any other law for the time being. It is income tax law. Whatever be mentioned in any other law at the present time, or whatever be mentioned or contained in any judgment, decree, or order of any court, tribunal, authority, that means wherever it is mentioned, forget about that. Whatever it is mentioned against this line, you will forget the person and its member, the club and its member shall be deemed to be two separate persons, and the supply of activities shall be deemed to take place from one such person to another. Imagine to introduce the tax on this activity, what type of explanation they have inserted. Whatever is mentioned in any other law for the time in force, or whatever be mentioned in any of the decision made by any court, law, authority, forget about all these things. For the purpose of this law, what we will consider, club and their member, we will consider as a two different persons. And hence, it would constitute supply if other conditions are fulfilled. Is it clear? Next exception. This is the first exception to our rule. Next exception. Generally, we know that the supply should be made in the course of furtherance of business. If it is not made in the course of furtherance of business, that is not supposed to be considered as a taxable. However, the exception is that if you are importing services for a consideration, whether or not in the course of furtherance of business, it will be constituted as a supply. In general, we know that the supply should be made in the course of furtherance of business. If it is not in the course of furtherance of business, it will not constitute supply. And hence, tax is not required to be paid by you. The exception is that if you are importing services, be careful, services only, not on goods. If you are importing services, not domestic services, if you are importing services, only services, not goods, for a consideration, and you are paying consideration for it, whether it is for business or not, it is treated as supply. You are liable to pay tax on it. Is it clear? The exception number 2. This, for example, many times, say you people are play trendy crush. There is in-app purchase. You bought. You bought certain lives, etc., by paying some money. I believe Candy Crush is the company is outside India. So we can say that you are importing certain services, and for that services you are paying consideration, and that is not used in your business. It will be considered as supply. You are liable to pay tax on it. However, if you are importing, if you are downloading certain documents from Google free of cost, since there is no consideration, or any software you are downloading from the Google, even though the software is from outside India, it is not you are not supposed to pay tax on it. Why? Because you are not paying consideration for it. If you are paying consideration for it, yes, it is treated as supply, then you are liable to pay GST on it. Is it clear? Number next exception, the activities specified in Schedule 1 where consideration is missing. Still, these activities which are mentioned in Schedule 1 are considered as supply. In this Schedule 1, they mention four type of activities. Even though consideration is missing, but still they will consider it as a supply and you are liable to pay tax on it. The first, the first activities they have mentioned in Schedule 1, the first activity they have mentioned in the Schedule 1 suggests that suppose I bought certain asset, say I bought a laptop for my business use for rupees 1 lakh. On this, I paid 18,000 GST. I'm not going into CGST as GST, say GST 18,000. This 18,000 I claimed as a ITC and I will consider this 1 lakh as a cost for my fixed assets. After a couple of years, my child asked me for laptop for his school help, etc. He need permanent on permanent basis. It is not for single day use. It is not like that. So what I have done, I give this laptop to him. Now, what happened? At the time of acquisition of this machine, I had availed ITC. Since why I have, I'm eligible to for this ITC since the intended use of this machine is for business. Now, once I provide this machine to my kid permanently for his use, I dispose this machine or I provide this machine to my kid for permanent uses. Do you think the intention, the intended used for by business are killed? The machine was bought for my business, hence I am eligible for ITC. But when I provided, I dispose of, I permanently transfer this machine to my kid or someone else, even though there is no consideration, it will be considered as supply. Even though there is no consideration in this on transferring this machine to my kid or someone else, still it will be considered as supply and liable for GST. Done. This one is the first activity mentioned in Schedule 1. Number 2. However, if in number 1, I have one point keep in mind. If at the time of acquisition of that assets, if I did not claim any ITC, and now I am transferring this machine to my kid or someone else, this is not considered as a supply. If it is free of cost and transferring without any consideration, it will not consider as supply. So ideally, there are two parts of this activity. Number 1, at the time of acquisition, I have taken ITC, and now I am transferring this permanently or disposing this without consideration. Then it will be considered as a deemed supply and liable for GST. Is it clear? Number 2, transaction between principal and agent. Even though there is no consideration, it will be considered as a supply. Number 3, transaction between related party. It is considered as supply even though there is no consideration. It is extended to distinct person. What do you mean by distinct person? Anyone? Anyone? What do you mean by distinct person? Try to understand the concept. Very simple concept. When I can say I sold, say, product X, I'm a seller of product X. I sold my product X, this product, to one of my relative, Mr. A. I am Vikas Kundra. I sold product X. I am dealer of this product X. I sold this product X to Mr. A, who is my related. Who is my related? I sold this product to one of my related person, that is Mr. A. My brother, my sister, anyway. Can I say that in this transaction, again, still there are two persons. Still there are two persons, me and my relative. Me and my relative, two persons are involved. Hence, we can say that yes, supply is between two persons. Consideration is missing. It is still taxable. It is still deemed as a supply. Think about a situation. I'm locating in West Bengal. My head office is located in West Bengal, and I have another branch in Karnataka. From my head office, I'm transferring certain goods to my Karnataka branch. From the point of view of West Bengal, can I say that yes, it is a supply? Yes or no? Even though I have transferred the same goods to my own branch located in Karnataka, it is considered a supply. But how could it will be termed as supply? It is not fall in number one. It will not fall in number two. Consideration is not there. So ideally, this is not covered under the common definition, the first part of this definition of the supply. And then it is we are not related person. Do you think we are related person? The answer is no. The answer is no. We are not related person. Why no? To become a relative, I need at least 2%. Can I say that me and my branch are relative to each other? It is absurd. Me and my branch are the same person. We are not related. Don't you think so? So this clause, if we left till this line, related person, supply between related person, even though it is without consideration, is not applicable on this type of transaction between head office and branch. To become a related person, at least 2% should be there. One, me and my relative. My head office, my branch are not related. They are same person. So there, this clause is not applicable. However, government want to levy tax on this type of transaction. The purpose for levying this type of transaction is that. Try to understand the problem, why government are supposed to levy tax on this type of transaction. The problem of the government. Earlier, the goods are located in West Bengal with head office, the goods lying with head office. That means the goods are in West Bengal. So who is entitled to collect tax on this type of transaction? Till now, the goods, the tax are with West Bengal government. Destination-based tax. GST is a destination-based tax. Suppose my head office has bought these goods from Delhi. From Delhi, these goods comes to West Bengal. At this time, who is entitled to collect this tax in this transaction between Delhi and me? West Bengal government. That is a destination-based tax. Now, if I transfer these goods to Karnataka, the goods are reached to Karnataka. If we did not consider this as a supply, how tax will be shifted from West Bengal to Karnataka? Since destination-based tax are there, now Karnataka government are entitled to collect tax, are eligible for tax. If we did not consider this one as a supply because there is no consideration, they are not related person, how we will shift our tax from West Bengal to Karnataka? For the purpose of shifting this tax from the pocket of West Bengal government to the pocket of Karnataka government, we want to treat this transaction as a supply. If it is not considered a supply, the person are not supposed to pay any tax on it. So government in third activity covered in list 1, schedule 1, mentioned that transaction with related person or distinct person. They are not related, they are distinct person. are considered as supply even though there is no consideration. Is it clear? And fourth one, fourth one, if I am importing services, I have better chart for this one. This one, import of service. Regarding import of service, there are two exceptions. One exception we already discussed, import of service for consideration without business are treated as supply. We already discussed about that one. That means this part we already discussed. This part we already discussed. Now we are going to discuss about this, which is in schedule 1. If I am importing services, even though it is without consideration, but if it is for the furtherance of business and it is from related person or distinct person, it will be considered as a supply. I am importing services, it is without consideration, but in the use of, but for the purpose of my business, but the seller is not related person, then it is not treated as supply. And if it is for my personal use, from anyone from I'm getting this services from related or non-related, it will be not treated as supply. The transaction, that means the taxability arises only when I'm importing services without consideration for the purpose of my business from my relative or from distinct person. Then this transaction, even though there is no consideration, it will be subject to tax. It will be considered as supply. For example, I purchased this premises located in Tamil Nadu for my office. My sister located in US, she is an interior designer. I asked her to design this for my office, and since she is my related person, I'm not supposed to pay any money to her. Free of cost, she is supposed to design that one, and that is used, that design, that services are used for my business purpose. I'm supposed to open an office. It is not for my residence. Now, it is an import of service. The answer is yes. It is import of services. Be careful. In case of goods, it is not applicable. Only in case of services, it is applicable. It is import of service. The answer is yes. It is without consideration. The answer is yes. Yes, it is without consideration. It is for business purpose. The answer is yes. It is from related person. The answer is yes. If all are yes, then this is treated as supply. If it is with consideration, then definitely it is supply. Even though without consideration, it is also treated as supply. If the services obtained by me from my sister is for designing my residence, I bought this as my residential purpose. Since business is missing, hence here it will say it is no. Hence, in this situation, it is not considered as a supply, provided it is without consideration. If there is a consideration, then it will fall into this criteria. Then again, it become taxable. Be careful about that thing. In Schedule 1, there are 4 activities are mentioned, which are considered as a deemed supply. Even though consideration is not there, still these 4 activities are constitute as supply and you are liable for GST. Done? Any question till now? Anyone have any question till now? Please raise. Anyone have any question, any query? Please raise through this chat box. Okay, no question. So I'm continuing with this. So now we have deemed supply, etc. Now we are coming to schedule number 2. Schedule number 2 are not like deemed supply, etc. It is just give a clarification. Clarification of what? Whether a particular supply is considered as a supply of goods or whether a particular supply is considered a supply of services. For example, yesterday I visited to a restaurant and offer a dosa with chutney and sambar. That I visited a restaurant with good ambience, with AC, etc. And I ordered a dosa and they served dosa with idli and sambar. They charge rupees 270 plus GST. Now I'm worried whether it is a supply of goods or whether it is a supply of services. Earlier, what happened? Before GST, what was the scenario? Try to understand. If we consider that is a supply of services, why it is supply of services? It is a fine dine. I enjoy the ambience. I enjoy the cool weather of AC, cool air of AC. So I am getting services. The way but the waiter serve me. So some kind of services element are there. So it may become as a services. And and again, if we think in this way, dosa is a material thing, sambar chutney is a material thing, so it is a supply of goods. Pre-GST era, both central government as well as state government are charging tax considering their viewpoint. Since central government is entitled to levy service tax on provision of services, central government is saying this is services, hence you are liable to pay service tax. On the other hand, state government are saying that this is a sale of goods, hence you are liable to pay VAT, and both of the government are levying tax on it. It will create confusion among us. So in GST era, they clarify whether the particular transaction, whether the particular supply, it will be treated as a supply of services or it will be treated as supply of goods. Sir, what is the use of that when both of them? What will be changed if we will consider as a goods or we will consider a supply? The tax is only GST. So since everything a single tax is applicable, now that this distinction whether it is a supply of goods or it is a supply of service are not required at all. But yes, dear student, even though it is fall under the same tax law, but still we need to segregate this one. Why? Number one, try to understand. Number one, there may be different threshold limit for registration. In case of services, in case of supply of goods, there may be different threshold limit for registration. So we need to identify whether I'm a supplier of goods or I'm a supplier of services. Number two, there may be few schemes which may be applicable only in case of goods and some other scheme may be applicable for supply of services only. So we need to identify what I am selling, whether I am supplier of services or I am supplier of goods, whether the particular scheme is applicable on me or not. What is the threshold limit for my registration? Depends on this. If there is two different threshold limit, then we need to identify what type of supply I have made. For that purpose, we need to identify whether the particular supply is a supply of goods or it is a supply of services. To clear all doubts, in GST law, earlier there was some confusion among this. To clear all this doubt, now what in the GST they prepared schedule number 2, where they mention each and every activity, whether it is constituted as a supply of services or whether it is constituted a supply of goods. That means we can say that schedule number 2 provides a clarification regarding nature of supply. Whether the particular supply is considered a supply of services or whether a particular supply is considered as a supply of goods. We need to take the help of schedule number 2. Ideally, generally we know what is the nature of that particular supply, but few we are required to understand. Like this hotel, we already taken the example of dosa. That would be considered. It is clarified through schedule number 2. For the purpose of GST, it will be considered a supply of services. For works contract, it will be considered a supply of services. Where there is a composite supply like works contract, etc., it will be considered a supply of services. If we have right to use any asset, it is considered as supply of services. Non-compete fees, it will be considered a supply of services. If we sold the goods outright, ownership has been transferred, it will be considered a supply of goods. So this is a table where you can learn and there is a clarification regarding nature of supply. Is it clear? I'm not going into word by word in this. After that, there is again third schedule called activities. In this schedule number 3 is also called negative list. If any activities are listed in the schedule number 3, that denotes it will neither consider a supply of goods nor consider a supply of services. Hence, since it is not a supply of goods or services or both, GST is not applicable on this type of activities. That means it is, if in examination, if it is a question like this are asked, write any 5 activities covered in the negative list. What you are required to mention, that means it's schedule number 3 you are required to provide. Any activities from schedule 3, any 5 activities from schedule 3 you are required to write. Got it? In schedule 3, services by an employee to the employer are not considered a supply of services, not considered a supply of goods. However, if your employer are giving gift of rupees 50,000 in value or more, then that component would be considered a supply of supply, and you are liable for paid tax on it. Supply provided by court, service provided by court or tribunal, neither considered supply of goods nor considered supply of services. No GST. Member of Parliament, member of state legislatures, member of Panchayat, President of India, Vice President, Controller and Auditor General of India, whatever they are providing their services, it is not considered, neither considered supply of services nor considered supply of services. Hence, no GST on it. Services of funeral, transportation of diseased body are not considered as supply. No GST on this. Among this number you are required to understand. Sale of land. If you are selling a piece of land, you are not supposed to pay GST. The concept is that even though it is not covered in this, we will not levy tax on it. We will not charge GST on the sale of land. The reason is that GST is applicable in case of supply. Supply of what? Supply of goods or services or both. What do you mean by goods? Land is not a goods. Land is not considered as a goods. Even though I am engaged in the business of land, land is not considered as a goods. Why not considered as goods? Goods means anything which you bring in the market for sale, for supply. We are not brought land in the market. It is an immovable. To become a goods, that asset, that thing should be movable. Since it is an immovable, hence it is not considered as a supply of goods, neither considered, not considered as supply of services. Furthermore, if you are selling a building, a flat or apartment, After completion of construction, it became immovable property, not supposed to be taxed. Not you are not supposed to pay GST. That means in case of immovable property, if you are selling land, be careful selling land. If you are giving land on rent, it will be considered as a supply of services. If you if it is on rent, it is considered a supply of services. If you are selling outright, then it is covered in negative list. No GST. In case of other immovable property like building, etc., under construction, after construction. In case of under construction, if I am selling a building, that means I book a flat in an under construction property, under developing property, and during this phase, still the building are under construction, I sold this flat to someone else. It will be considered a supply of services, and I am liable for GST. And after construction, that means when construction become end, and after that I am selling that one, then I can say there is a two use. Giving on rent, it may be considered a supply of services. And in case it is I'm selling this after construction, it is covered in negative list. No GST. So how could I identify whether construction is complete or not? The ideal, you are required to check completion certificate from the local authority. The date on which a building, under construction building, got or obtained a completion certificate from the local authority. Up to that date, we will consider that property under development, under construction, and beyond that, we will consider that property, construction is complete, we will consider that as an immobile property. If I'm selling an immobile property, I'm not supposed to pay any GST on it. That is covered under negative list. Is it clear? Few more items are there. Actionable claim other than lottery, betting, and gambling. Few more like uh, merchant trading or out and out transaction. That means transaction from non-taxable territory to another non-taxable territory. It is not considered a supply. Logically, not supposed to be pay. You are not supposed to pay tax in India, even though you are located in India. But supply has been made from US to UK. Indian government are not entitled for any tax. High sea sale, you are not supposed to pay any tax on it. These are covered under the negative list. Now we are going to discuss one more aspect of supply, which is known as composite and mixed supply. What do we mean by composite and mixed supply? Few times a supplier are selling bundle services, bundle supply. What do we mean by bundle supply? For example, suppose a customer from Delhi, I am located in West Bengal. He asks me to supply 1,000 pieces of this pen, this type of pen. So I pack this one, say one question are there. Yes, sir. Which are part and parcel of the service or goods? Uh, Apart from this, whatever you are supplying goods or services, it is covered under the GST. That means alcohol, liquor for human consumption, petroleum, and the few activities which are covered in the negative list. Apart from that, everything are covered under the purview of the GST. Clear? Okay. Now, the customer from Delhi asked to 1,000 pen from me. The cost of this pen, say rupees 100 per piece. So out of this 1,000 into 100, the bill of rupees 1 lakh has been raised by me. He asks me to provide transportation help and insurance, etc. So I charged insurance rupees 500, cost of transport rupees say 2,500. Altogether, I create 1,03,000 as a bill plus GST on it. Now, the PAN is subject to tax at the rate of 5%. Can I say that I am supplying PAN as well as I am also providing certain services to the buyer regarding insurance and transportation? Can I say I am selling a bundle supply? I am providing a bundle supply to my customer. In this type of supply, can I say that one of the supply, there are three items I am supplying. One is PAN. Number two, I am providing this services as well as I am providing this services. I am supplying a bundle. Now question arise on this entire 1,03,000. How GST will be calculated? Suppose on PAN rate of GST is 5%. Say on transport rate of GST is 12%. On transportation rate of GST is 12%. On insurance, say GST rate is 18%. So at what rate this 1,03,000 we are supposed to charge tax? Is it 5%, 18% or 12% or some other rate? The act is saying that each and every bundle supply are supposed to examine. Each and every bundle supply are required to be examined whether it is a composite supply or whether it is a mixed supply. If it is the case of composite supply, if this is the case of composite supply, how could I identify whether it's a composite or mixed supply? In case one of the supplies is the principal supply in the bundle and other supplies are ancillary to that. In that case, that bundle is considered as a composite supply. In our example, can I say that one of the supply is principal supply? Which one is the principal supply? Can I identify the main supply? Can I identify the main supply? Yes, I can identify that is supply of PAN. If it is not there, obviously insurance and transport supply would not be there. Agree or disagree? In that case, since principal supply are there and other services or other supply involved in the bundle are ancillary to that, that is the case of composite supply. That is the case of composite supply. In case as bundle is treated as a supply of composite supply, then the rate which is applicable on principal supply would be applicable on entire value. At what rate PAN is supposed to be what rate of GST is levied on PAN? It is 5%. Irrespective of the rate of 18 or 12%, which is applicable on different supply in the bundle, entire 1,03,000 are supposed to levy tax at the rate of 5%. Even though say rate of tax, say in this case PAN is case 18% and here it is 5% and here it is 5%. Still in this case also, since PAN is considered as a bundle supply, PAN is considered a principal supply, entire 1,03,000 you are supposed to levy tax at the rate of 18%. You cannot say that the part of the value of the supply are subject to tax at the rate of 5% or few are taxable at 12%. No. Whatever be the rate is applicable in case of principal supply, that would be applicable on the entire value. Is it clear to all? Is it clear to all? I believe it is clear to all. Good. Try to understand another example. In last month, there was Diwali. Generally, we in India, we are supposed to provide some uh, gift to our relatives. So I bought a gift hamper from Haldiram Bhujiawala. In this, few are sweets are there, few portion relating to dry fruits are there, nuts, etc. are there, few chocolates are there, and few cold drinks are also there, few drinks are there. I bought this one for rupees 2000. I bought this entire hamper for rupees 2000. I do not know what is the different value for each and every supply in this. Can I say this is a bundle supply made by the Haldiram Bhujiawala for a price, single price of rupees 2000? It includes sweets, it includes chocolates, it includes cold drinks, it includes dry fruits. Say in case of dry fruits, the rate of GST is say 18%. In case of sweets, it may be 5%. On chocolates, it is 18%. Cold drink, say it is taxable at the rate of 28%. Say. In this case, can I say this is a bundle supply? The answer is yes. Can I say any of the supply involved in the bundle is a principal supply? Could you identify any of the supply? That means whether supply of sweets is a principal supply, supply of chocolate is a principal supply, or whether dry fruits is a principal supply, or supply of cold drinks is a principal supply. We cannot identify a principal supply. Could you? Anyone? The answer is no. You are also not supposed to identify which is the principal supply and and other supply are ancillary to that. No, we are not able to identify that. We paid a single amount of rupees 2000. How could I segregate? How could I levy tax on it? Whether some portion on at the rate of 5%, on some portion we are supposed to pay 18%, on some portion we are supposed to pay 28%, on some portion we are supposed to pay 18%. How could I segregate this value? In case of bundle supply, if we are not able to identify the principal supply, this is considered as mixed supply. This is considered as mixed supply. In case of mixed supply, the rate which is applicable, the highest rate which is applicable on the component of the bundle, that rate would be applicable on the entire value. Which one is the highest among all these rates on the product involved in this bundle? 5, 18, and 28. I can say 28 is the highest rate. So on entire value, we are supposed to pay 28% as GST. Is it clear? What are the difference between composite supply and mixed supply? We are required to identify whether the bundle is constituted as a mixed supply or a composite supply. Depending on that, the rate which is applicable on the entire bundle, we are required to identify. In case that bundle is constituted as a composite supply, the rate which is applicable on the principal supply will be applicable on the entire value. On the other hand, in case that bundle is classified as a mixed supply, in that case, the rate which is highest among the rate on the product involved in the bundle, that rate would be applicable on entire value of the supply. Clear? Anyone have any question till now? Now, after doing this, charge of tax. There are three type of charges are there. Rather than two are known and one I have for the better understanding, I'm saying there are three type of charges. forward charge, reverse charge, and loosely I'm using the word third party charge. Forward charge. In general, maximum goods or services under GST are subject to forward charge. What is the forward charge? Ideally, the supplier, the levy is on supplier. The government are levying the tax on the supplier of the goods or services. That is known as forward charge. However, sometime on the product which are notified, product goods or services notified, instead of levying tax on supplier, they are levying tax on the recipient. The receiver are supposed to pay tax on it. Instead of be careful. Ultimately, buyer are supposed to pay tax. That is, but we are talking about the levy. The burden is ultimately on buyer. We know that. That is the concept of indirect tax. In that case, each and everything would be considered as reverse charge. That is not. Try to understand the levy and burden. Burden is always on the consumer, but try to understand the levy. Who are responsible to make payment to the government directly? In case when supplier, the tax is levied on supplier. That means supplier is responsible to pay tax to the government directly. That means government will collect money from the supplier. That type of taxation is known as forward charge. On the other hand, when the recipient are supposed, the levy is on the recipient of supply, that is known as reverse charge mechanism. Be careful, most of the goods or services are subject to forward charge. Few of the goods or services which are notified by the government are subject to reverse charge. And third one, for example, Ola, Uber, etc. We know that some urban club, what happened? I'm getting services from a carpenter or a plumber. The plumber are providing services to me, but neither plumber nor me are required to pay tax. The company, the aggregator, that is urban club, are supposed to pay tax on it. That's why loosely I'm using the word third party charge. We can change, we can term it is a e-commerce operator. But loosely, for better understanding, I'm using in this context as a third party charge. Generally, it is applicable in case of e-commerce operator. Be careful, that is not for Amazon and Flipkart. It is for service provider. First, we are discussing about forward charge. Majority of the goods or services are covered under this forward charges. A tax called the central goods and service tax shall be levied. Similarly, each and every state government have same type of law. There they will mention a tax called the state goods and service tax shall be levied on all intra-state supply of goods or services or both, except on the supply of alcoholic liquor for human consumption. We already discussed about this one. On what the rate, on what we are supposed to pay tax, we discussed about GST, say at the rate of 18% we are required to pay, or at the rate of 5% we are required to pay. Say 5%. I'm supposed to pay GST at the rate of 5%. I visit to a shop called Shopper Stop. I bought 10 trousers. 5% of it, 20 into 5%, which comes to one. Say 20 trouser I bought, 5% I am supposed to pay GST. I can provide one trouser as a tax to the government and carry 19 trouser to my home. It is like this one. GST is or not quantity. The 5% of what? It is an ad valorem duty. Whenever we are saying it is an ad valorem, that means we are supposed to levy that percentage. We are supposed to calculate that percentage on some value. It is not on quantity. It is on value. So we are supposed to determine the value of the supply. On the value of the supply, we will apply this rate. That amount of tax are supposed to be paid to the government. Is it clear? So a tax called the central goods and service tax shall be levied on all intrastate supply. Be careful. First of all, we are going to discuss CGST. Same law with SGST equivalent are there. And in case of interstate, the word would be interstate would be replaced by instead of intrastate. Except on the supply of alcoholic liquor for human consumption, on the value determined under section 15, it is an ad valorem tax at such rate which are notified by the government on the recommendation of the GST Council. What is GST Council? What is the GST Council? And one more thing, CGST rate cannot exceed 20%. 20 plus 20, if I can term as a GST rate, max to max GST rate, government will levy 40%. But at this point of time, none of the product are subject to 40% GST rate. 20% CGST plus 20% SGST, which combined rate is 40%. But till now, the maximum rate of GST is 28%, 14 plus 14. Now, what is the GST Council? In brief, I can say that the functionalities of GST, try to understand. Try to understand who is levying GST. Can I say that central as well as state governments, all state governments combinedly handle the GST law? Yes or no? Central as well as all state governments jointly executing this GST planning for about this GST. Yes or no? If like income tax, if you want to amend anything in income tax, central government will provide a bill before parliament. Okay. If respective state government want to change in any law which are related to their subject, they will pass a bill in their assembly, their respective assembly. Yes or no? But think about GST. This is managed by both of the government, central as well as various state government combinedly, jointly. But there is no common platform for that to discuss what we are required to change, what should be done, if there is any trouble, there is an issue. There is no common platform to discuss that part because state governments members are not supposed to visit central in the parliament, and the parliaments MP are not supposed to visit in the assembly. They are not supposed to speak in the assembly. So there is a bottleneck. There is no common platform where both of them can discuss and decide any matter relating to GST. To provide this common platform, a GST Council has been framed. This is a constitutional body. In this GST Council, union ministers, union finance ministers, as well as state minister of union state minister of finance became the members of this, along with the all ministers of finance of all state governments became the member in the GST Council. That means all finance ministers, whether central or state, became the member of this GST Council. This will serve as a common platform where they will discuss, they will meet and pass any after any discussion, they will amend, they will change whatever they want. They recommend that thing to the government, and after getting the recommendation from the common platform, which is GST Council, government will act accordingly. If this is not there, if central government will amend any GST provision, any rules, etc., if they amend, Sometime it may happen, state governments are not happy with that. They will claim that we are not considered. And if state government change, then again there is some issue. So GST Council act as a common platform so that all the finance ministers, central or state, meet and discuss and amend or change or whatever the recommendation they want to do, they want to provide, they provide to the government. Union finance minister is considered as the chairman of this council. Central government has 33% voting weightage, and remaining states collectively have 66.67% voting. And the decision was passed on the basis of majority. Quorum is one half. Okay, remaining part you are required to discuss. You are required to read in chapter number 1 relating to GST Council. Okay. Ah. Then we are here on CGST will be charged on all intra-state supply. Similar law are with SGST are there. Each and every state government has similar law, except on the supply of alcoholic liquor for human consumption on the value determined under section 15 at such rate which are recommended by the GST Council, but that rate should not, that is the upper cap, should not exceed 20%, 20% CGST, and collected in such manner as may be prescribed shall be paid by the taxable person. There is one chart here. Alcoholic liquor for human consumption. Power to tax remain with the state we already discussed. 5 petroleum product, crude oil, diesel, petrol, natural gas, and aviation turbine fuel. GST Council to decide the date from which GST will be applicable. Yet it is not decided. At present, the existing system is applicable. That means central excise duty is levied by the central government and sales tax is levied by the state government. Tobacco. Tobacco is a special product. It is a part of GST. However, government may levy excise duty on it. Central government may levy excise duty on it. Entertainment tax levied by state government are subsumed in the GST, but entertainment tax levied by the local bodies like municipal corporation, etc., that are still there. Similarly, as per section 5 of the IGST, in case of interstate supply, the IGST is applicable maximum up to 40%. We already discussed about that thing. The central tax on supply on this 5 product are not applicable. The rate of GST nowadays, few more rates are involved. Basically, at the initial stage, at the inception of the GST law, there are 5 rates they have mentioned: 0%, 5%, 12%, 18%, and 28%. 0% that is exempted. 5% on the necessity product, which are not basic. On that product, they are supposed to levy tax at the rate of 5%. And on luxurious or demerit goods, they are supposed to levy tax on 28%. And in general, on product, the rate of tax would be either 12 or 18%. Nowadays, few more rates are there. Now, reverse charge. Few of the goods or services being notified by the government are subject to reverse charge. On these cases, if any goods or services are covered under reverse charge, that denotes tax are not required to be paid. The tax is not levied on the supplier, but it is levied on the receiver. Since this is a deeming levy, we are deemed as you are responsible. This is the not the common situation. Each and every conditions are required to be fulfilled to levy reverse charge mechanism. For example, if the product is cashew nuts, not shelled or peeled, if the supplier is agriculturist and recipient is any registered person, then only reverse charge is applicable. If supplier is not an agriculturist, then reverse charge is not applicable. Similarly, there are few products. These are the list of the products on which reverse charge is applicable. I'm not going into one product by product. And similarly, this is a list of services where reverse charge is applicable. And then e-commerce operator. This one is the e-commerce operator. If you are e-commerce operator like this, services by transportation of passenger by radio taxi, etc., that is Ola, Uber, and then service by providing accommodation hotel in hotels, that is Oyo, like this. Housekeeping such as plumbing, carpeting, urban clap, and supply of restaurant service, Zomato, Swiggy, etc. On this, the e-commerce operator are responsible to pay tax on it. Is it clear? Anyone have any question? Zero rated supply. After discussing this zero rated supply, we will conclude our session. Zero rated supply. Be careful in the GST, 0% rate of tax, that means nil rate, tax at the nil rate or at zero rated. These are two different supply. These are two different things. Mathematically, we know that both of them are the same. But in GST, these are two different things. Now we are going to discuss zero rated. We know that government want to promote export. Any supply made as an export or supply of goods or services or both for authorized operation in SEZ, Special Economic Zone, shall be treated as a zero rated supply. Zero rated supply means any of the following supply of goods or service or both, namely export of goods or services outside India and supply of goods or services or both for authorized operation to a special economic zone developer or a special zone unit shall be treated as a zero rated supply. What is the difference? Try to understand. Suppose I am supplying product A. Ideally, product A is subject to 5% GST. I am located in West Bengal. If I supply this product to a buyer located in Tamil Nadu, this product are subject to 5% GST rate. If I am exporting this, it will be considered a zero rated supply and I am not supposed to pay any tax on it. I am not supposed to pay any tax on it. On the other hand, if it is a nil rated product, if I am supplying in the state of Tamil Nadu, again it will be nil rated, and if I am exporting, again it is nil rated. That means that is on the where the bar is located. On the basis of that, we are giving certain exemption. We are not charging GST. If it is an export or if it is a supply made to a special economic zone for a specified purpose, then that product are not subject to GST, else it would be subject to GST. That is known as zero rated supply. We as a government want to promote export so that no GST on export, etc. are there, so that our price become competitive in international trade. It will promote GST, it will promote export, and in turn, our trade deficit will be on lower side. The benefit is that one more major difference between nil rated and zero rated. If suppose I bought a raw material A and raw material B. On both of these product, I paid GST of rupees 1 lakh. By using this product, I manufactured product C and product D. Product C is taxable at the rate of 5% and product D is nil rated. In that case, since product D is the nil rated, we have a common input of rupees 1 lakh. We have common input of 1 lakh. And out of this common input, we are producing two different products. One is taxable at the rate of 5%. That means one is taxable and another one is exempt. In that case, this ITC are required to be available to me in proportionate. The ITC, the input which are used in making this taxable supply are available to me, and remaining ITC I am supposed to reverse. That means proportionate ITC I am supposed to reverse. On the other hand, if this is not the case, say I am deleting this product D. If product C, which is subject to tax at the rate of 5%, I'm selling this one is in Tamil Nadu, I'm supposed to pay tax at the rate of 5%. Similarly, if I'm making the exporting this or supplying as a to an SEZ for a specified purpose, that is zero rated supply, then I'm not supposed to pay any tax on it. But in that situation, I'm not supposed to reverse my ITC. Proportionate ITC are not required to be reversed, which are required to be made in case of nil rated supply. In this zero rated supply, we are not supposed to reverse our ITC. And moreover, if these ITC are not utilized by me, say 100% of supply are made in the zero rated supply. Now, how could I use this ITC? And my supply is my outward tax is zero, but whenever I'm getting that purchase, I'm supposed to pay tax on it. Entire ITC, if I'm making zero rated supply, the entire ITC, first of all, if I'm able to use that one, fine. If I'm not able to use that one, entire ITC, I will claim as a refund. I will claim as a refund. That is the difference between zero rated and nil rated. Be careful about that one. In case of exempted, we are supposed the common input credit are required to be reversed. But in case of zero rated, even though at an outward supply, I'm not supposed to pay any tax. I'm eligible to get ITC 100% at full strength, as well as if I'm not supposed to adjust that ITC with my outward liability, I will claim refund. I will claim refund from the government for this 1 lakh. Is it clear? In case so one question is there, sir, it is important to remember product to product name in RCM. For goods, don't worry, but services, yes. Reverse charge on services, yes. You are required to remember. Anyone have any question? We have a couple of minutes to take your queries, your questions. If anyone have, please raise. Anyone have any question, any query, please raise. No one have any question, any query? Okay, thank you. If you enjoy the session, you learned, then please post your comment in the chat box. Whether you enjoy, you learned, whatever you feel, please post your comment in the chat box. Else we will meet for next session, the last session on 28th. Please post your message in the chat box. If you have any question, any query, please post that one. If you enjoyed the session, if you like to comment, please post in the chat box. I am little bit on speed because we have limited session to cover all these things. So speed is an issue. I believe for revision, it is fine. Thank you, Vinay bhai. Thank you, Rosaline. Yes, yes, sir. We will do ITC practical in next section. After this, we will within a few minutes we will go with time of supply place. Then that is value of supply. Then we will move towards ITC in next session. Surely we will do that one. We will cover that one. Thank you, Aditya. Thank you, Medna. If still anyone have any question, any query after conclusion of this session or 28th session, you may post your query to my YouTube channel. Any of the as a comment in any of the video, the I will resolve your query if possible for me. The channel name is Tax Point India, or it is in the name in my name, that is CA Vikas Mundra. Thank you. Shall I conclude the session? And in that case, also subscribe it. Thank you. See you again on 28th. Is there any issue with the material? Thank you.